The markets have pulled back, but will they go any further? The leaders are rotating and the new market strength is emerging. How do we get on the right side of these next trading opportunities? Gary Glover is the one guiding us through. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
So we've got a bit of sunshine coming through in Melbourne on your shoulder, which is looking great, and warmth to the day, but trading opportunities is what we're looking for. How are you interpreting this market? Is it sort of like a new day, a new bit of sunshine, new opportunities, or what do you see?
Look, we've had obviously 2 weeks down from the US market off sort of some key sort of technical levels. So obviously the Nasdaq's gone to the 138 expansion and the S&P up to the 161. So those are big levels, just sort of Fibonacci levels. And we noticed that in kind of range bounding markets there, those fib levels are definitely having a lot more relevance than maybe they do in other type of markets. So, but yeah, we've had a 2-week pullback here, so it's come back reasonably quickly there. Yeah, I don't see a big correction here, Chris, but I think normally the corrective process should last longer than 2 weeks. So I think you'll see sort of something which lasts a bit longer. So you might even see a little bit of a rally in there. Like an A-B, so sort of some variety. So I see a little bit of, little counter pop and then come back there. Yeah. Obvious support obviously is that old high there. So what, 16.5 on the Nasdaq. I think it's a little bit, S&P 500 might be what, 6.1 or something like that from memory. But, yeah, I'll probably more just, more that high there. Just don't see big corrections there. So I think it'll probably just come back and sit on top of that high there. I just might need to sort of use a bit more time there. So, yeah, it might just be a bit of a corrective process there. So it might just be a bit messy here. I've seen a few stocks, some of those, I think some of those leaders in the US come off quite a bit. So the Mag 7 have come off, had a pretty decent pullback. And the small caps have done a bit of lifting. Some other sectors have done, so things like property trusts in the US have bounced. From healthcare, some biotech management bounced as well. So definitely management sectors there, we've seen some bounce come in there. So for our market there, I think it's, because we're pretty resource orientated there, and most others, we will need the resources to sort of have a bit of a bounce there. So I noticed last Friday, most of them sort of bounced off the lows there. That was probably a good sign, but still need to see a bit more, some more positivity there, some more signs there. So, yeah, but I think you just might get a little churny here, a little volatile for the next few weeks there. But that sort of 60-year cycle is sort of telling us maybe sort of from mid to late July into sort of early August, maybe into mid-August is probably from a cycle point of view, that's sort of the might see a bit of weakness into that window, but. And just don't think we'll see any big corrections there. So the fact that we are seeing rotation throughout the market is a pretty healthy sign.
Can you just explain the rotation there for a second? Because we get a bit of questions on that. Is that where you're looking at within the market? You're looking at different sectors and industries?
Yeah, so I mean, like when a market has been running pretty hot, and then the whole thing cools off and sort of starts to sort of put a bit of a topping pattern and then rolls off and then goes into a pretty decent bear phase, then you'll see most things will be extended, and when the market sort of rolls off, all the sectors, not all of them, but a large percentage of them are all sort of come off together. You'll have a few leaders that'll start to roll up early, and then you often sort of see sort of I guess the market thins out. Have that breadth issue where sort of like at the end the heavy, I guess the strongest names do the heavy lifting at the very end, and everything else is sort of rolled up. You can see lots of other stocks below the 50-day moving average. So you see basically seeing a growing number of stocks below the 50-day moving average. And you see only a very small few. And that was sort of concerns. A few months ago, people were concerned about that. But what's happened here is we've seen actually breadth improve. So while the leaders have actually cooled off here, and it's normally you see everything else cool off before the leaders, and then the leaders just join the cool off party, and then the markets go through a bearish phase here. But we've seen those leaders sort of start to cool off there. At the same time they cooled off, the rest of the markets lifted. And you actually look at the number of stocks above the 50 day moving average, the number of stocks above 200, number of stocks actually going to new highs, that's actually improved. So as the leaders have cooled off here, the underbelly of the market actually has improved. We're actually seeing small caps rally. We're seeing some of the mid caps sort of show those trends, some different sectors move as well. So we're seeing other parts of the market show strength while the leaders are coming off, and that's not normally a popping sign. Normally when the leaders roll off, that's everything else is rolled off, and they're just joining the roll-up party. But whereas at this time here, we're seeing rotation, we're seeing clear signs of other sectors step up and move up there, and we're seeing more stocks. Actually, the breadth has improved there. So we look at if you follow a lot of the US sort of stuff, that you'll see more stocks above the 50 moving average. You'll see more number of leaders come to the market there. So actually, the breadth is actually improving there. So there's actually good signs there, healthy signs for the market. So those are constructive, in my opinion.
Right. Okay. So the leaders often fall last, and if the rest of the market's already rolled over and fallen, it's kind of the bearish phase. But the leaders have started to come off. The index has come off as well because there's such a heavy weight and a large concentration of it. But when you look at the rest of the market, that wide breadth, you're saying that especially those that are sort of the lower end, they've actually started to lift. So that's that rotation you're talking about, is in the leaders falling, but some other ones are possibly emerging. And could that be where you focus on trading opportunities, particularly in this report?
Yeah, I think you're probably a Friday report there actually with looking at what sort of sectors are showing relative strength. It's probably going to be more revealing in terms of, and we're seeing property trusts, we're seeing some healthcare names, some biotech names. There's been a few sectors that have sort of that have stood up here, and yeah, so there's sort of been some weakness, and we've seen the small caps as well. So oftentimes you might sort of go, oftentimes you see big caps go first, mid caps go second, small caps run last, and then the whole thing unfolds there, and then your leaders tend to follow everything else that's fallen away here. But definitely seeing different markets within markets here, so definitely sort of rotation there, and it's just healthy signs. It's actually what you sort of want to see there, and because obviously you sort of, for me, I look at the cycles, and the cycle's still pretty positive into the end of the year, and you think, okay, well, how is that going to happen if their leaders are really extended? That means other sectors have to have to sort of stand up and shine here, and then all of a sudden, bang, we're seeing Nasdaq off 2.5%, which means, and seeing small caps rally 3.5%. You go, oh, there it is. The other sectors are standing up, and we're seeing some of the healthcare names and defensive sort of shine, sort of stand up as well. So that's what you should see, because in the old days there, Chris, when going back, for those that haven't been around for a couple of years, we used to often, when the market was sort of maybe in a bit of a sideways sort of move there, we'd often sort of see the resources to bank switch. So the banks might have had a run, then they sort of cooled off, and then the resources had sort of cooled off, and they run. So at the same time the banks sold off, the money was coming out of them, going into resources, and they bounced. So then you see banks drift back, resources rally, and then at some point the resources would tire, they start to sell off, and then the banks would down low, and then they'd start to bounce again. The money would go from the resources into the banks. That used to happen, every few months. So those sort of things are natural in the marketplace. So just sort of healthy sort of signs. So it's just, I view it as pretty constructive there. So we are sort of seeing, and we should see other sectors sign up, because as a market sort of grows there, sectors do need to have pauses, need to have a pullback there. And if you think about it too, if all those strongest names, if those make 7, if they have like a 20-30% correction here, and the rest of the market, does some pretty good, holds up pretty well. Let's say the market only comes back, say, 6 or 8% or something small. All those leaders will all come back, say, 25-30%. That leaves them in a chance to sort of rally and go back up to the high again. You might see the other sectors sort of congest as well. So just that rotated through the markets there. So just not seeing widespread selling across all the sectors, which we normally would see if we're going to go for a bearish phase here. So I view that as a healthy sign.
So with those healthy signs, and you mentioned markets within markets, that leads question to, you've talked about the NASDAQ. You talked about how you could see that sort of messy, bit of a correction. The S&P 500, same thing. take up a bit more time, but not a huge correction. When we look at the chart of the ASX and the Dow Jones, they're notably different in what they're setting up. So our market's significantly different. And you've talked about resources and bank rotation. It's maybe not happening so much right this second. Could be. How do you see our market moving as the US is doing exactly what you've described?
Yeah, so we have lagged a bit. Obviously, we haven't had that sort of tech-heavy index like the US. I guess the strongest part of that markets have been. We're definitely a bit more of a value market there, obviously a resource market as well. So it gives us a little bit of a different makeup there. But we did sort of see that whole thing tighten up here. Clear signs of buying the dips there, and then we had a bit of a surge up there. I thought we might have got to maybe sort of somewhere between 81 and 100 there, but we didn't quite get there. Only got to about 80, 84 or something like that. So we got close there, not quite there, but has pulled back there. So it might just sort of congest. It might even sort of come back to the sort of congest or the sort of break zone there, and it might even spin around there for a bit. So the volume was a little heavier last week on that sort of first off the high there. So, but I still think it'll be a bit messy here. Just might go through a little bit of contraction there. So I think the US market, I don't expect it to be sort of deep selling there. I think you'll see a few little bounces on the way here, but we just might go through a bit of a sideways chop there. You remember the Nikkei was one of the first indices to break out. I think it went up 3 or 4 weeks into a new high, and then it pulled back to something like 12 weeks, tight back to the sort of break zone, and then went there. So you can get indices can tighten up and go through a bit of a zone there. So we could do something like that. We might go through we could go through a sideways, zoning for multiple weeks or even a few months there. Go back a couple of years ago, I think we had there might have been a phase there when we stay within 150 point range for something like
2 months or something ridiculous.
It was a long time, yeah.
I remember we were having these conversations and just sitting and looking at 150 point range weeks on end, waiting for it to crack it.
Yeah, so you can go through that. So that's, but again, that's just sort of congestion as well. So, that gives a sort of chance for some of the hot sectors to sort of cool off, other sectors to sort of stand up, but for the whole market to sort of move as well. And then it allows the potential for the market to get into the next stage to move up. So that's what we want to sort of see here. That's not all one go here, I guess. So, so that's why I think resources is key here. If the resources can sort of hold up here, give some of the, sectors like, financials just so overvalued. It's just unbelievable. I just, bordering on madness really, but give that sector there, which is, run hot, chance to sort of cool off. And if other sectors can sort of do some lift in there and the index doesn't sort of come off too much, that'll be a healthy sign there. Because then sort of, say the banks come back, take 10%, come back to say, some higher but more realistic valuations. And then resources are bounced, and say some of the other sectors are bounced as well, then they might sort of congest and cool off a little bit, and then the sectors that have come off here can bounce again. So, so it's it's constructive, but just get the feeling here we might have a messy, month or two ahead here.
Yeah, well, that's the Aussie, and we have been moving a little bit more like the Dow Jones, but the markets with the market statement you said before, this chart looks different to the other US indices. You did say the tech came off and the smaller caps surged. Obviously, the Dow Jones are not small caps, but they're not as heavily weighted towards the tech side of things. How's this one sitting within that rotation that you're seeing and new levels emerging?
It's normally like that sort of overlapping sort of top there. It's normally a bit of a bearish up there, but the fact that we took off the other week out of it quite clearly and come back and then bounce back above it again just highlights to me that this is probably not going to be the usual, that sort of normal sort of setup there. So, but I think you might just get a little bit of a congestion sort of period there in the stock here. So might just sort of, ingest back here. But the cycle's still positive for this year, but still, August and October are probably the 2 weaker months there. So it'll just be interesting to sort of see whether we sort of see that develop or not.
Okay. So when we go from the Dow Jones to US markets, we look at the Aussie and you're talking about resources. We really have to start off with BHP, the biggest giant sitting on the market with a huge market capitalization. You were just saying before how we're sort of toying with these old lows. and we did come down under it, but then off them in the week. So that's really showing that candle here. Is this, you've got FB there, so what would make this a false break? And I think this is kind of what you were looking for before.
Yeah. This is actually quite important. If you look at that false break at the high, what our sort of false break rules suggest is that, okay, we go on that weekly there, if we go to a false break in the weekly, then we're going to go back and retest the current swing low, that low there into there. So it seemed like a pretty far away at the time. But those are the sort of rules there. I mean, I think something like A2 Milk did a false break there recently on the low when gone back to the new high, and it's actually gone back to the new high. It took obviously 12 months to get there, but it actually has swung all the way back up there, and that's the rules of the false break. So it's just interesting we've actually got down there. So sometimes you see false breaks here, but then eventually it might come down, and it might take a long time to get back down there. But it is interesting that it has come back down to that level, and it is a very sort of, the thing about the 40s and the 70s when inflation was high, we did see volatile markets there, but we did largely see sort of sideways orientation. And we have noticed in the last 2 years that we've definitely seen lots of new highs and new lows and range breaks there, but then just switch, sort of sell straight off. So a lot of V-shaped moves straight up, straight down again. I mean, stock like ASX, sort of, that's been moving $8 or $10. I think Mineral Resources have had like $20 moves up and down here, like maybe 2 to 3 of them as well. So just seeing some volatility in the marketplace. So normally breaking to a new low would be pretty bearish, but when you're in a bit of a rangy sort of market, this is often where the opportunity lies here. So obviously I've been watching here, wondering this could be a false break here. This could be where the market sort of steps in and turns there. And it is, if inflation does sort of still linger, then commodities should still remain sort of reasonably buoyant as well. So just need to see a bit more here. Sort of watching this pretty closely. It's had a bit of a bounce last Friday, had a bit of a bounce, starting to retreat again a little bit at the moment. So it just needs to sort of hold that level. So it'll be about see if it can bounce here on volume, see if it can retreat on less volume, see if they're going to hold up here. That's what we want to sort of see there. So definitely watching that sector pretty closely at the moment there. Because I think, BHP, Rio, I think Mineral Resources, some of the bigger names have had corrections there. Fortescue's probably gone through a bit of a break and below a kind of a key level, so that doesn't look as strong to me. So, but yeah, just got to be, there's some potential opportunities here anyway.
Okay, well, we go from BHP, staying within the resources space, IGO. She said in that lithium sector in your report, this has been, fast up, fast down. Even though it's a monthly chart, it's been a huge rise from that 4 or 5 base it was coming from, getting up towards 17, and a bit of volatility getting towards 14, and then almost making its way back to $5.70. How this big pullback, how do you see this playing out? It's a battery minerals. We do have that demand, but we see EV and Tesla having sort of excess stock and decreasing prices. How does that unfold with something like IGO and the charts that you've got here?
Yeah, I don't sort of go to my monthly charts that often now. I sort of tend to sort of stay within the sort of weekly and daily sort of predominantly there. But when I sort of do see a really deep correction, something sort of that's sold off probably a little bit more aggressively than you think, sometimes it's wise to sort of go out and look at some longer term charts. So I've done this a few times there where I've seen like the Shanghai, even the Nikkei sort of sell off pretty aggressively. And they'll often come back to these sort of key long-term monthly sort of support lines. They'll come back and retest those zones there. So just, when you get a correction this sort of size there, sort of looking for, whether there's any longer-term support there on the monthlies there. So just interesting here, the IGO has sort of come down to that sort of monthly support here. So definitely a level there where we might sort of see something. It definitely need to see a bit more signs there. I think you sort of need to see some sort of positivity there. But yeah, just sort of wanted to keep an eye on here. Actually, it does look like long-term sort of key support zone. So far it's been sort of bouncing off this sort of off that level. I've just been trying to sort of see if it can sort of hold here in the next week or two. So we've got a monthly sort of saying this could be a really important level. So now we're probably just going to drill into our weeklies and dailies and sort of see if we can get some sort of constructive price action there. But we can't just go buy this thing blindly. But if we sort of start to see, like this is the same thing, like Masonic Healthcare had that sort of key Fibonacci level around that 2480. And so again, we saw a little BCP sort of set up on the daily, and that gave us a trigger there. So, so yeah, 2380, sorry, yeah. So sort of, you look for those sort of key levels there, but then you just got to, drill down into your sort of smaller time frames and see if they sort of hold here. So this is looking pretty healthy actually. Sonic, starting to sort of grow here. So, yeah, some good volume exhausted in the low, starting to build here. High lows here, just starting to show a little bit of relative strength versus market. Got a first level ahead here around 28.15. So it'll be interesting to see whether we can just sort of crack through that, or whether we might get some resistance there and ease off a little bit. So yeah, we might get a little bit of a pause there and then go high here. But it has been that type of market, Chris, where we haven't seen too many of the normal pauses this week. We tend to just sort of go straight up to the level and just straight back down again. So not sure if we're going to get the pause like we normally would do. But yeah, so I do think ultimately this might head back towards 32.50. But just, yeah, be interesting to sort of see how that plays out there. So normally you do a bit of a building, you might find resistance there first and then maybe congest a bit and then work through later on. But yeah, it's not the sort of price action's not sort of normal personified at the moment. It's definitely a little bit different than usual. It's definitely sort of even moving up and down a lot faster than it normally would, which is sort of consistent with those sort of markets where inflation is a little higher than normal.
Right. Well, sticking with the healthcare space, you've got Helios. This one has been drawing out quite a long bottom. So we've got the daily chart going from monthlies and weeklies, but it has popped up and then it's got some sort of consolidation here. So how do you interpret that, and what are you looking for to trigger the trade that you want?
Yeah, so we got a few things here. We've sort of got that sort of descending wedge. We also got sort of like those sort of three overlapping lows as well. And I often sort of see, like, you see this, what they call like broadening bottom there. We see that low, you bounce back up again, you go slightly lower, and then bounce back up again and slightly lower again. And it looks like it's obviously pretty negative there, but we're only going slightly lower each time. That's the same with like a broadening top as well. You just go slightly higher each time there. Well, that's sort of showing that the market's sort of struggling to push it too much lower each time. It's sort of starting to catch a bit of buying there, and then obviously at some point stops going down, it breaks out, and then you should see healthy volume. So you should start to see signs of accumulation starting to go. So the bigger volume lines, and then you should, the first sort of leg up here, you should sort of see some pretty heavy buying, and then it pulls back, and hopefully you see the volume dry up, which is exactly what we're seeing here, and you should see the price action tighten up as well. So they're looking pretty textbooky so far here, Chris, as well. And we're just sort of tightening up here. So, yeah, I think normally sort of when you sort of go through a bit of a tightening phase, you favour breaking out the same way that you moved into that tightening phase. So we've rallied up into the tightening phase. We should rally in the same direction most of the time, not all the time, just most of the time there. So the probability does and the sector is sort of seeing a little bit of strength as well. Seeing CSL Cockle being pretty robust there, since obviously Sonic and some other healthcare names pretty good. I think we saw ACL rallied pretty sharply in the last couple of weeks as well. So yeah, so the sector is showing signs of improvement there. So definitely one to watch here. I think it's get a little B wave break here on the Helios. Definitely one to be following. It looks pretty solid.
Nice. Well, if we go to SEK on the ticker, you've got the weekly chart once more, and you're saying possible accumulation and false break. So it's still spending a fair bit of time in this region. But importantly, this October low that we came down from and then bounced out of quite quickly, it's just been undercut, 3 times, hasn't it?
Yeah, so I guess the things that are striking me here is the volume. So the last 4 weeks, the volume's probably been double the average volume. So that's sort of possible signs of accumulation taking place down the low there. And there's definitely those long weeks as well at that low there. So we're definitely bouncing off that lows. And then we have gone to a false break as well. So we come back, retest the previous sort of swing low, and showing support there. So the stock's gone from 27 down to 1950 here. So pretty decent correction there. And we've seen here over the last couple of years, it's, up, down, up, down, up, down, up, down. It's very volatile in the swings there. So, pretty solid business. I know, the last 2 years, everyone's been worried about employment numbers the whole time. So, I still think, Seek's a pretty reasonable, still decent quality business there. Does look like a pretty interesting technical zone there. And just, to me, there's sort of clear signs of some accumulation taking place down at the recent lows there. So it looks pretty constructive.
Nice. Well, Endeavour Group is the next in the list, EDV. Weekly chart once more. This has been coming down, had a bit of congestion.
Yeah.
What's happened here? It looks a bit hard to understand, but you've obviously found an opportunity in there. How do you interpret this?
Yeah, so we've sort of, like that last sort of bounce there is probably still stay within the downtrend, but then we started to move down here, and that the whole thing's, it's probably used up twice as much time on the way down to that rally. Yeah, so basically twice as much time here, and we haven't gone to a new low. So we're sort of struggling to sort of go down here. Now we've sort of got like an ABC there, and the whole thing's tightened up, and we've just broken out of that little sort of descending wedge. And so it looks like looks now like a first high low here. We're definitely seeing increase in sort of trading volumes down at the recent low as well. So definitely signs of accumulation coming in, and then we've sort of broken out some pretty solid volume as well. So it does look pretty constructive there. So looks like we might have a first high low in place. So looking for that, at least that 580 is a bit of a short-term target there. But if we get to see some sort of healthier volume there, maybe it can sort of push higher. That looks pretty constructive.
Nice. Okay. Well, Endeavour Group, you've got GrainCorp. It's been a while since we've looked at GrainCorp, but this weekly chart is showing quite a bit of promise. What are you looking to be created in this chart to spark your interest and get trading?
Yeah, so we've got a few things there. We obviously, had a recent pullback off the high there, pretty impulsive rally into that high, and then we sort of had a nice sort of, what I say, like a nice ABC pullback. Come back, half of the range, which is pretty healthy. Come back to a bit of a retest of that level. And then we're almost in a bit of a sidewaysy sort of rectangle there for quite a while. And then eventually sort of did break out of that, but then sort of come back and then, so again, pretty messy market there, which is probably in line with the type of, market we're in. But what is the most constructive thing there is we do have a series of sort of high lows sort of building there. But most recently, the last pullback has just sort of pulled back and sat on top of the previous high. The price action has sort of tightened up there. So volume sort of starting to has sort of lightened off after that pretty robust rally in good volume. And then we've sort of lightened up in here. So, the whole thing's sort of, done a bit of building, a bit of a base, sort of sometimes they say the longer the base, the kind of the longer the rally will be, so the move out of it as well. So we do have a large sort of basing pattern in there, potential to sort of be going here. So do like to look at this there. I think it looks pretty constructive there. So it is a bit of a messy sort of stock and can be a bit thin, can move around. So probably a bit lighter there, and it does sort of tend to overlap a little bit, break out and come back a bit. So I think so far the fact that we've just had consecutive sort of high lows there is probably the most constructive there. And then just the tightening too. We want to see a strong rally, pull back, tighten up. Yeah, so it looks pretty decent here.
Nice. Well, there's some good companies to take into the end of the week. We say thank you very much, Gary Glover from Nova Capital.
Thanks, Chris.